All right, welcome to today's show. So let's hope that I have sound right now. Okay. Strategy and Bitcoin. What's going on in the marketplace right now? That's what I'm going to jump into. What's happening with the price points and the support levels. If you're just joining us, I went on for an hour just like moments ago on complete mute. It was amazing. Okay. So hopefully if I have sound now, put it in the chat box that I do have sound. But we're going to jump into today's show and talk about the support levels for Bitcoin. We're going to talk about strategy and the long-term play of what's happening. We're also going to be talking about what's happening with the whales and the institutional buyers. Are they holding? And what does the on-chain analysis tell us, meaning what's behind the scenes? And good, TCC says we can hear you now. So good. I mean, this classic, I go live for 1 hour on mute, so into the content that I don't even realize I'm on mute. Bonehead move of the day, right? Okay, but I'm back and I'm committed to delivering information. So part 2's coming, all right? All right. So I have new equipment, guys. So this is the game. And we've been changing up equipment. And every time something gets plugged in or plugged out, it screws it up. So I got to test it. All right. So let's jump into what's happening on the data. What is the support level for Bitcoin right now? And let's talk about the long-term analysis of where we're going and what's happening in the short term that shook the price last week, and then what's happening with the tariffs that are coming up April 2nd. This is a really important video and giving a macro viewpoint of zooming out of where we are actually going, but also giving you behind the scenes of the price action, because a lot of times we have retail investors like us where we're just looking at the price points and we're reacting to what's happening in the price points. And every time we react to what happens in the price points, that's exactly what a lot of the market makers and the people who are manipulating the price and the long-term investors are doing. They're waiting for retail to sell off so they can gobble up your Bitcoin or gobble up your strategy. So let's talk about what's happening. I'm going to give you specific examples of how this happened recently on Friday, where $14 billion worth of options expired that rattled the turbulence of the marketplace, kind of like an airplane that's going and then you're getting whacked with turbulence. That was the expiration of the options. And then what's the indicator showing of the whales? And are they holding? Are they holding and putting their Bitcoin in long-term storage, or are they actually selling off? So we're going to talk about that today as well. So without further ado, let's jump in a little bit here. And first thing important, not financial advice, not tax advice, not legal advice, just here to share some good information with you, okay? So let's jump into what's actually going on in the marketplace. And I'm going to walk you through it right now, okay? So again, we are here from a long-term perspective today. Today, I'm going to give you the truth behind what's actually happening right now with Bitcoin and also what's going on with strategy and the financial shift that every single one of us is witnessing in actual real time. If you were just watching me on mute for the last 1 hour, I was on mute for 1 hour doing the same exact presentation that nobody heard, okay? So let me ask you a question. Let's pose and structure the frame of this conversation today. If you saw a company that was buying over 500,000 Bitcoin, more than 2% of the entire supply, would you consider that a signal? Hint, hint. We know this is strategy with 506,000 Bitcoin. If you saw the same company issue common shares, the same company with convertible bonds, even preferred stock with these Strife and Strike and Strickit and Struckit options. Strife and Strike are just basically fixed income streams where other investors that don't want to take risk, like pension funds and insurance companies, they want to put it into a vehicle that strategy is offering that provides fixed income returns, okay? But if you saw a company doing this, all for one simple reason, to buy more Bitcoin, would that tell you something about where we are going in the long term? All right. And now we have lots of analysts that are saying right now, we have, well, not lots, I should say there's analysts that are split. Some think we're going down to 200 on strategy, some think we're going up to 650 on strategy. But let's take a look at what's really going on behind the scenes, behind just the ticker that you see every single day of like, hey, we're now sitting at 82,000 something. What's going on behind the price and why? Okay. So today's video is a full breakdown of what's actually going on, what's happening with the whales, and also what happened with $14 billion of options that just expired in the marketplace. And so whether you're brand new to this stock of strategy and Bitcoin, or you've been doing this a while, This is good for all of us to remember. And the cool thing is I'm going to break it down in very simple terms because I hate stuff that is like at a, you have to have a PhD to figure this stuff out. I like to make it simple in a 5th grade language because that's how I learn. All right. So we got a software company like Strategy. They've turned into a Bitcoin vault. Let's just call it what it is. Strategy is gobbling up all kinds of Bitcoin. And we know that this is their plan long term. We know that the strike and the strife options are providing institutional investments of money flowing into actual strategy. Why is this important? Now, Saylor talked about this in 2020, 2021, 2022, 2023, 2024, 2025. He keeps talking about it. And if we look back to 2020, where we did not have the institutional demand in 2020, we are living in a different universe now in 2025. It's completely different. And what he has said consistently for years is when institutional money starts flowing in, and when money moves out of the fixed income marketplace, which currently stands at about $300 trillion around the world of the fixed income marketplace, meaning people putting money in bonds. And if you watch my previous videos where we talk about the money supply and the fact that the money supply, and we print more money every single year, if you are printing money at the 7% rate and your bonds are doing 4%, you're not getting ahead. So Saylor believes, and many of us who are we love Bitcoin and we love strategy, we believe and know that a portion of that money is going to move out of the $300 trillion bond market over time, and that money is going to move into Bitcoin and into strategy. And so when strategy comes out with these fixed income products like Strife and like Strike, it is designed to go after institutional investors who typically park their money in bonds to some degree, such as pension funds, insurance companies, endowments. They want to take less risk. But now Saylor's come out with a product to say, hey, you can take less risk and still take less risk, but get exposure to the upside of companies like Strategy and Bitcoin. And he's come out with products to say, invest in these products. And rather than these investors who are typically going for 4% rates of return, they're now getting 8 and 10% rates of return, which is now going to help gobble up a huge portion of the fixed income market over the years. And it's not just Strategy, a huge portion of that fixed income market is going to pour into Bitcoin. So that's why long-term, this isn't a gimmick, right? This isn't some financial experiment of what Strategy is doing. This is long-term. We're in the game. Some people call it brilliant. Some people call it crazy. What do you call it? Put it in the comment box down below. Let me know what you're thinking. I call it bold, decisive action of what's going on in the marketplace. And I think that you are in the right place right now getting educated about this. What you do with your money is your choice, but this is about education. It's about truth. It's about facts. And my promise to you is I'm going to get into the facts in this video right now to give you the macro trends and also what happened last week and where are we headed in the future. Okay, so the price action. What's going on with the price action? We know that $109,000 has been the peak of Bitcoin in this run so far. We then dropped down to 77,000 and fell all the way down there a couple weeks ago. And so right now we're hovering around the 82,000 and change price point. This is a key support level. I'm going to talk about it in a moment. Okay. So let's break it down piece by piece. Bitcoin is definitely on a breather from the 109K. Remember those days? I remember when we broke 100 and I was calling my brother on the phone. We've been in Bitcoin since 2018. I'm like, yo, dude, we broke 100. It was a monumental, amazing moment. And then all of a sudden we're all sitting here at 82,000 and it's like the fire's breathing down our throat. We're down in the pit. People are like, should I sell? Should I get out? And that's exactly what the institutions and the market makers and the people who make markets and the people who move markets, they want you to do. They want you to flip out. They want you to sell. And they count on retail investors shitting their pants. No offense meant on this one, okay? So emotion takes over and there's a chain reaction and markets move. And we have fear and we have doubt and we have uncertainty and we have greed. That's how markets move, okay? So Bitcoin is like this emotional stock market kind of thing, even though it's not the stock. But the metaphor is like the emotional stock market turned up by 100. We're not talking about a normal stock. We're not talking about the S&P 500 that trades at an average of 14% or gets returns of 14%, I should say, okay? Smart investors have seen the movie before, all right? People who've been through the bull runs before have seen the movie before, all right? And so this is not uncommon for us to have these corrections. Is it uncommon to us to be having this experience right now? Completely uncommon. And not from the sense of market corrections, but from the sense of we have a completely new players in the game. We've never had institutions in the game like this before. So it's a completely different market. And if you watch Saylor's videos, you've watched him many, many times say, in 2024, he said it, 2025, he said, you traders, he said, you graph watchers, you people are looking at the charts, you people are looking at all these models. You can throw out your charts, you can throw out your graphs, you can throw out your models, because at the end of the day, we are in a whole new world. And we are, because the institutional money moves differently and they move more slowly. So those of us who are expecting the bull run, and we should be here right now, and the price should be going up, and we all want it for strategy and Bitcoin, we are in a completely new structure and a completely new world. So retail investors can panic right now. They can watch what the institutions are doing, where they're patient, they're calculated, and retail investors are typically panicky. Of course, there's different checkbooks. When you're dealing with $1 trillion and you're an institution, you get a different checkbook than somebody who might have invested $5,000 or $10,000 and they're hoping for it to go up in 30 days. But that's not how you play this market unless you're a sophisticated trader. All right. So where Bitcoin is tight, and that's where this brings us today, we're between this $82,000 and this $90,000 price range. And it's like the no man's land, and nobody likes the no man's land. And everybody's like, what's going on? How do we get out of the no man's land? We hate the no man's land. It's crap. Get us out of here. Right. So making sense, everybody. If you can hear me well, because it's just making the joke of it. I went live for 54 minutes on mute before. It's amazing. Okay. So if you can hear me, let me know. Okay. Put it in the comment box. So that is the game of what's actually happening in the market. So let me get into it more. Okay. So right now, Bitcoin's trading around 82K. All right. So what does this all mean? All right. So the numbers matter because we're at this 200-day moving average and the exponential moving average, both sitting around 85,500. And this is a key price point that I'm going to talk about today. And it matters because you're going to see some market makers that really were counting on this price to hit this exact price at the end of last week that had $14 billion worth of options expire, and people who were betting and bullish on Bitcoin got wiped out of the market, and the turbulence of the airplane of strategy and Bitcoin that are moving along got whacked with the turbulence, and now we have uncertainty in the marketplace even more, aside from the tariffs, which I'm going to talk about, aside from the inflation rates, which I'm going to talk about today. So if you're new to this, all right, the 200-day moving average is basically the average of the Bitcoin price over 200 days. The exponential moving average is kind of like the short-term price. To put it into English, because I hate technical terms, it's simple. You're in a car. You're driving on the Bitcoin strategy journey, and you're driving, right? And that's like the 200-day moving average. We're going on this journey, okay? And it's moving like this. The exponential moving average tends to be shorter, punchier. It's like the speedometer. I'm going to go 70 miles per hour, 80 miles per hour, 90 miles per hour. And that's kind of like what's happening last week of 82, 85, 88, back down to 82. Could we go below 80? That's what's happening in the market, okay? So the danger zone, right, is kind of at this level right now, and Bitcoin just dipped a little bit into the danger zone. Okay, I'm going to give you all truth here, but I'm also going to zoom out and look at the long term, and that's very important. The whole purpose of this video is to not get shaken out. Not financial advice, not tax advice, not legal advice, but the whole purpose is not to get shaken out, all right? So here's what's happening. Support levels are 82K, guys. Okay, that's what traders are looking at right now, but it's also what we should be looking at for our own health in the short run. So the support levels are 82K. 82 to 82.5. If Bitcoin holds at this level, it signals a foundation is still strong. All right. It means the bulls are still holding the fort at this price level. Now, again, still bullish long term. Don't everybody faint at once. I'm still bullish long term. The indicators that I'm going to share today are still bullish long term. We're just talking about what's kind of happening right now in this moment and what could this mean for the markets in the next couple of weeks. Okay. So foundation. Still strong if we hold the support level. Resistance that we need to break through is 89,000 to 91,000. We got to break that level. All right. Support at 82 is the price support level. 80,000 becomes emotional. We all know with round numbers, people go crazy. You go from 80,000 to 79,999, the world goes crazy, right? Because the round numbers give the emotional support. It's going to be okay. You break through 90, you're like, we're back in the bull zone. But these are actually resistance levels of 89,000 to 91,000. We got to break through that to get the eventual long-term bullish momentum back so we can hit new highs, all right? So if Bitcoin falls below $82,000, things could get ugly. People are going to sell off, okay? And we could drop back down towards 80,000 and go below again. This could happen. So if we start to go below 82,000, you could expect more selling pressure. Why am I sharing this? Not to be the bear, just to give the facts. of what could potentially happen, right? So, and we'll get into the Trump tariffs in a moment and what's going to happen on April 2nd potentially, right? So 80,000 isn't just a number, it's a signal, it's kind of a statement, it's a line in the sand, but let's get a little bit deeper, okay? Because short-term traders are focused on these levels, but the broader macro picture is just as important, and the macro picture is more important, okay? It's more important. And that's the purpose of this video, to be macro-oriented, not short-term what's going to happen in 30 days, to be macro-oriented, but also to be aware of what's coming down the pike, okay? So inflation data, Federal Reserve rate decisions of what's happening. All of this, Trump's proposed tariffs. We got some serious headwinds coming in. Let's not deny the facts, all right? And when these types of things happen in the macro environment, tech stocks, crypto, Bitcoin, risk assets, these are risk assets. When these types of things happen, the risk assets don't really like it, all right? And they go under pressure. And Bitcoin's not an exception to this right now, okay? Bitcoin's still seen by many as a high risk, high reward asset. And when the world gets nervous and they get a little bit crazy and they start pooping their pants a little bit, they go into safety and they start moving the money out of the risk assets and into more cash or treasuries or bonds or things like that, okay? So it's one of the reasons why Bitcoin is struggling to break back through the $88,000 level. And we saw it this week. We went up to like 88,000 and change, and we didn't break through the resistance of 89,000. And now here we back are at 82,000. And everybody's sitting there depressed with their face on the counter, like, oh my God, what's happening to my stuff? And I'm one of those people too, but I don't get depressed for long. I just kind of like, damn, the market's down. Okay. But macroeconomically, looking at the big picture, that's how I make decisions. So it's not that I don't feel, it's not that I don't get the same experience that you have. I just have been through this and I've been hit in the gut 94,000 times. So I have a cast iron stomach right now when things like this happen. And I know, and I have certainty in what strategy is doing. I have certainty in the vision of strategy and Sailor. And I admire Sailor's bold decision making, and I admire what Bitcoin is. And that's why I'm in these stocks. Okay. Crypto, I should say, and strategy being a stock. So sellers come out of the woodwork when these things start happening. Okay. And so Bitcoin starts backpedaling a little bit. And even though the price is down, the selling pressure isn't coming from the long-term holders. Key point. Okay. This is such a key point. We're going to look on chain here of what's happening behind the price. And it's not coming from the long-term holders. And this is incredibly important. It's being driven by the short-term traders and the emotional reaction. Okay. So combine that with what we're going to talk about here, which is OTC desk flows, another term which when you're new to the marketplace, you're like, what the hell is this thing? Over-the-counter desk flows. Okay, basically the big dogs, the big tunas, right? They go in to the OTC. When Sailor goes and buys some Bitcoin, they go to the OTC. It's where the whales buy. It's where the sailors buy. They go in there and they buy some Bitcoin and they take it off of the OTC. All right. So we're going to talk about what happens when they buy Bitcoin and they take it off the OTC. And we're going to talk about the trend of the OTC from 2022 to 2025. And you're going to see that that trend is a bullish indicator. So despite the fact that we're getting bearish news, that is a bullish indicator, long-term bullish indicator. Okay. We're going to look at the on-chain indicators. We're going to look at institutional buyers. We're going to look at what's actually happening right now. So we might be in an accumulation zone. We might be in. Okay. That might be where we're at, considering what's happening with the long-term holders. We may not be in the freakout zone, even though the price could go lower. Okay, so that's what's happening. Okay, so Bitcoin's under a little bit of pressure. It's lost some key levels, right? But it isn't broken. It hasn't collapsed, and either has strategy. All right, we saw a strategy jump down to 226 a couple weeks ago, and then boomed up to 330. This is how the stock moves, or 340, I should say. Okay, so if Bitcoin holds above 82K. And starts pushing back towards 88K, this is a sign that the bulls are regaining control in the short term. A breakout above 91K could mean that the price will be surging to an all-time high. That means it could be a direction to a new all-time high. But if we break below 82,000, especially below 80,000, the whole emotional thing comes out with these round numbers. People are going to go bah, 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 and we could go down for weeks or even months. Okay? But the message is clear here. It's not the time to zone out. It's the time to pay attention to what's going on behind the scenes and get knowledge. One who has knowledge then has control. Without the knowledge, there's no control. And when one is not knowledgeable about the subject, they shit their pants and they adios and they get out of the scene. Okay, so don't just stare at the price. Look at what's happening on chain. What does on chain mean? You can actually look at who's buying, like the buying that's going on, the selling that's going on, and you can look at what's actually happening versus like what's going with the price. Price 85, 82 versus on-chain data. There's buying, there's selling. We saw that the United States recently moved some money into the wallet. So you can actually see what's going on with the US government and their Bitcoin right now. They moved $1 million into their wallet, probably maybe a test buy that they're doing right now to transfer, not test buy, but a test transfer over to their wallet before they move 200,000 Bitcoin over there. Okay. So let's look at the broader macro signal. So let's get into the whales and what's going on with the whales. First, let's start with the OTC desks. Okay. What the whales do is they go through the OTC desk. So their massive buy orders don't show up on public orders. All right. So when they go to the OTC, the massive buy order doesn't show up in the public. And so it doesn't move the market because it's not showing up in the public. So if they bought directly on Binance, if they bought directly on Coinbase, you would see a spike in the price instantly, either up or down, whether they're buying or selling, and everyone would see it, and it creates more chaos. So the OTC is private, it's controlled, it's invisible to the casual observer. But here's where it gets powerful, okay? Crypto Quant gives some data and some statistics here, which is what we're interested in, data, all right? And it says that the OTC desks have been draining steadily since January 2022 and is still draining into 2025. What does that mean? It means OTC desks, lots of Bitcoin. Okay? Big whales come in, go grab Bitcoin, and they drain the Bitcoin out of the desks, and they pull that Bitcoin out and they put that Bitcoin into cold storage. So that's what we're seeing happening. A lot of the whales are buying this and then they're moving into cold storage. So the draining of Bitcoin off the over-the-counter desks is very, very bullish. And it's been happening from 2022 to 2025. Do we have a whole new financial world being built? The answer is yes. The trends are there and the institutions are the ones who move the markets. Period, right? And the whole institutional infrastructure led by strategy, led by our fearless, bold leader, Michael Saylor, the whole structure is being reorganized. So again, as Saylor says, stop looking at your charts, stop looking at your graphs, stop looking at all this stuff in the short term of what's happening with the price, because institutions coming into the game even changes the way that we look at bull markets and bear markets. All right? And in the past, I've done many videos where go back, let's look at what happened. Let's look at what happened, because it's good to look at things. It's fun to look at things, but we also see the trend of what's happening, that we're not in a typical bull market right now. At this point, we typically be turbocharging up, but we're not, because the institutional infrastructure is way different, okay? So we see these whales, you see these big players, they're moving into cold storage, which basically means the translation is they're not flipping it. They're not buying Bitcoin and flipping it. They're holding it long term. So it's not speculation. It's strategic accumulation that's being shown by the long-term data. All right. So metaphorically, it's kind of like, it's like gold bars, right? It's like, I'm going to go get all these gold bars and I'm going to put them in my treasure chest and I'm going to lock them away in my treasure chest. And if I lock them away in my treasure chest, that means that I'm not selling my Bitcoin. I'm not selling metaphorically my gold bars or my digital gold. I'm locking it away because I'm betting on this whole new financial world. We're in a whole new world, okay? So the behavior tells us something incredibly important. The public sentiment might be shaky. The institutional conviction is rising. It is rising, all right? So when we start seeing and the traders start seeing the 85,000 and the 83,000, the 82,000 price points, and we're looking at support levels, all of that's good data to see what can we expect. So on Monday morning, you don't wake up and crap your pants, right? But the long-term guys are not looking at these price points. Saylor buys the top. I think I saw a JLD on here just now, and JLD said in one of his videos recently, he said that Saylor keeps buying the top because he knows that the top will eventually become the bottom. All right? And so that is very true. So they keep buying and buying and buying because they know one day an $85,000 price point or $109,000 price point, which was initially the high, 2 years, 3 years, 4 years, 5 down, it's going to be so low. It's going to be the low point. So the institutions are betting on a $250,000, $500,000 Bitcoin in the long term, okay? So It is a hedge against fiat. People are waking up to this. It's digital gold. It's the next frontier of hard money. So let's break it down even further. Let's follow the money. Let's see what's happening. All right. So here's what most retail traders don't get. And I'm going to say it and I'm going to say it again. And you hear it all the time, but most people don't get the communication. And countries that are considering Bitcoin don't get the communication. The US government doesn't get the communication because you have people in Senate, you have people in Congress who are looking at this to study it and make decisions to understand it for the first time. So they can't possibly grasp the true concept of the fact that there are only 21 million Bitcoin. 19.6 million is already purchased. It's gone from the supply. So that means we have 1.4 million left. James from Invest Answers always talks about this. And he says that 5 million are like gone and lost forever because people lost their wallets, got hacked, whatever. They're gone and lost forever. So really, there's only 16 million Bitcoin. 1.4 million. So once countries, which they still have not grasped this, all right, maybe El Salvador has. Has the U.S. government grasped this concept yet? No. Even though we have a strategic Bitcoin reserve. Do they fully get it? No. Okay. The players get it, which are the committees that have put together. But do you think the majority of Congress and Senate who are new to Bitcoin understand this concept that we are dealing with the scarcest asset on planet Earth? I was just looking at the gold numbers the other day, and based on the gold numbers, there's 1.5% of gold being mined every single year. So there's more gold being mined every single year, which means that gold is not necessarily, it's not as scarce as Bitcoin. Even though gold prices are rising, it's not, because there's more supply every year. And Bitcoin doesn't have that. Even though there's more supply and the halvings are coming, eventually we will run out of Bitcoin. And even though the end date of that is 2140, which seems like 100 years out, we're going to keep having more supply of Bitcoin come out and we'll run out in 2140. No. Like the majority's been bought. 1.4 million left. The majority's been bought. When countries start understanding this, when governments start understanding this, these are the indicators that institutions are starting to understand. Liquidity is tightening. Long-term holders are sitting on their coin. Institutions are taking more off the market. Less Bitcoin available equals higher price sensitivity, okay? ETFs, we know, have changed the freaking game. Larry Fink is now going over to Europe. They're going to put an ETF in Europe because we even have people in Europe who haven't been able to easily go and buy Bitcoin. And I'm not saying they can't go buy Bitcoin, but they don't have the ETF products to where investors who don't want to go on Coinbase or don't want to go on these different platforms and they want to buy it from their stock account, when the ETFs come out in Europe, it opens up another market. So we know that strategy stock also acts as a proxy as well for as the world starts to find out about it and they don't have Coinbase accounts and they don't have Gemini accounts. What do you think they're going to buy? Strategy. They're going to be buying strategy. So much of the world doesn't know yet. They're not informed yet, but the signal is loud. Okay. So told you about what's going on with the OTC desks. Big players are jumping into the game. So let's say this directly to anybody who's been panicking over the price swings. Okay. I think the shift that we need to make now, and yes, I like to watch the markets every day. I do some trading here and there, but I trade with a very small percentage of my portfolio. 96% of my portfolio is invested, and I'm holding on to the large portion of my portfolio. Now, will I take profits? Yes. Not financial advice. Will I take profits in MicroStrategy at some point this year? Yes, I will. So, but we have to sit here and stop thinking long-term as like, I'm going to be a day trader in and out of what's happening day in and day out of the markets. Start thinking like a wealth builder, because that's the new game. Bitcoin is in a new game of wealth building institutions that are running the game right now. And if we start to follow where the puck is going, as Wayne Gretzky said, skate to where the puck is going, the institutions are leading the way right now. We got to watch what they're doing, okay? So let's talk about accumulation zones right now and what this means for actual Bitcoin. And here's the real story of what the charts are showing, and we're going to get into this, okay? Institutions are treating this dip as an opportunity to buy. That's the first thing. They are accumulating while retail is selling. And they are locking it up. They're not flipping it or selling it. And they're betting on future scarcity, and they're betting on long-term value. So if they're buying, the question then becomes, well, why isn't the price going up? And that's what many people keep asking. Like, the price isn't going up. The price isn't going up. Why isn't it going up? So I think, if we take a look at this, we see that I don't have an answer to that question, right? So I'm posing the question to say, why aren't the prices going up? All right. But the simplicity of it is that we know that the OTC balances are dropping. So if we look at the long term of how the markets are going to move, we can only look now and see what's happening with institutional investments, and retail is going to follow that. All right. So with the OTC balances dropping, we have institutional buy-in. We have coins that are being moved to cold storage. We have the ETFs and the macro trends. And so that's what's going on in the marketplace right now. So the question is, do you ride the wave or do you sell? So what I want to look at right now is I want to look at what's happening or what happened last week in the short term. And I think this is important to see how markets actually get manipulated. All right. And so to think that we aren't in a place where markets get manipulated, I think is just naive. And when we look at the $14 billion worth of options that just expired in the marketplace on March 28th, 2025, which was Friday, a huge amount of options expired. And there were people that were bullish holding options for Bitcoin, and the options expired. They got shaken out of their positions. And all of a sudden, the airplane that was flying, it looked like it was at 88,000, it was going to 89,000. All of a sudden, people got turbulence on their airplane and they jumped out and they got parachutes and they just bailed, right? Because they had to bail out of their positions. And what happens is with options is you might be thinking, what the hell is an option? I know we're talking about Bitcoin, but this actually matters, right? So an option is like an option to buy or sell at a certain price. So when these guys come in and they put in these contracts called options, it's an option to buy something like Bitcoin or sell it at a certain price. And there was a good portion of people that were buying options on Bitcoin and they were long on Bitcoin. And they were like, okay, this is bullish indicator that Bitcoin's going to go up. And when the market makers came in and they moved the price down and they moved it to a very specific price point, a lot of these people who were long on Bitcoin got shaken out and they had to, one, just get out of their positions. Otherwise, they were going to lose a shitload of money. Okay. So that's what happened on March 28th. And the magic price point level of where this was, and like the market makers knew it. They were driving the price point for max pain around this $85,000 price point. And on the expiration day, all those bets came due. The clock hits zero, and then it becomes time for all the people who are holding options to settle up. And that's where the things get wild, because you got 14 billion in Bitcoin and Ethereum options, right? And the market doesn't just sit there at this point. It moves. It gets pulled. It gets pressured. It gets manipulated. And yeah, the market makers are looking for the max pain point to drive people out of their positions. And that's what happened. And that's the price level where the largest number of option buyers lose the most money. And it was the $85,000 price point. And that's what happened. So if you look at the macro trends of things, you're like, what happened? We were going in a good place. We were driving towards $88,000. Market makers were looking and hey, they're like, hey, there's a whole bunch of people that have options at this price point. We're going to move the market. We're going to manipulate the market. We're going to drive them out of their prices. And that's how they gobble up the money and they make the money. And that's what the market makers did. And that's exactly what they did. And they manipulated the market. The prices go wild. And all of a sudden, we're sitting here and we're seeing an $82,000 Bitcoin. That's part of the reason. All right. Coincidence that these types of things happen? I don't think so, right? There's market manipulation going on, and we just need to know that we are in a new game. Bitcoin has become more of a mainstream thing. Strategy is more of a mainstream thing. People are trading strategy every day, all day. The trading volume is incredibly high, and you have people who are manipulating the stock, and they're also manipulating Bitcoin, period, okay? So 139,000 Bitcoin options expired. $12.1 billion in options last week. Another $2.13 billion in Ethereum expired as well. So it wasn't an ordinary Friday, right? It wasn't like your typical Friday, right? A little bit different. So ripples go through the entire market. It's another reason in the face of tariffs, in the face of inflation, for people to go and get a little shaky, and it creates selling pressure, right? So call it a little bit of a fake out. We think we're on the uptick. We think things are going well. We think we're going to break through, and a little manipulation. We dive back down, right? So that's just the options marketplace. Now let's look at other indicators such as the PCE, the personal consumption expenditures. What the hell does that actually mean? Well, personal consumption, what are people buying? All right. Expenditures, what are they spending money on? All right. This is what the Fed uses basically to gauge inflation. They're kind of like, okay, the Fed's thermometer for what's going on is our prices going up. So the goods and services and stuff we buy all day long, people are going to the marketplace. They're like, why are eggs so much? You know, the eggs are expensive. They've been expensive for years, right? Eggs are so much. Why when I shop at the supermarket is it so expensive? Things are expensive, man. It's crazy, right? So prices have gone up. And the basket of goods and services that are measured in this index is manipulated to some degree, right? They're not putting all the goods and services that we buy in there, but it went up by 2.8%, I believe is the number over the last year, okay? And so it's up. And so when the prices are up, the Fed's looking at that as a thermometer, and they're kind of like not necessarily going to lower the interest rates right away. Because what happens is if you have a demand up, demand drives the price up. And so when you have demand up and you have the price up, the Fed's watching that and they're like, we got inflation. That's not a good thing. And so they're more likely to keep interest rates higher in the short term with this, even though they announced that in 2025, we are going to have some interest rate cuts. So that's still coming down the pike. We may have two, but in the short term. So you have higher rates and you have tighter liquidity. What does that mean for you and me, right? Well, businesses that want to go get loans, the rates are high. I don't want to get a loan at a high rate. If I want to go buy a house, rates are high. I don't want to buy a house at a high rate. I want to go borrow money. Let's say an investor wants to go borrow money and put it into Bitcoin. They want to borrow at a high rate. So the money's not flowing as freely. And we know when COVID hit in 2019, money flowing around everywhere. The rates went all way down. People are borrowing money like crazy. They're getting checks from the government, and then they're just taking that liquidity and they're dumping it into the Bitcoin marketplace. So we want rates to go down. Some say that Trump's messing with this whole thing and he's trying to drive rates down and he's trying to force the Fed's hand. And maybe why he's playing around and doing all the things that he's doing. I don't think that's the main reason, but some say that. And eventually we got to get a rate cut. If we get a rate cut, it's going to be good news for Bitcoin. Okay. So we got politics. So let's get into the politics of it. All right. We got Trump, new tariffs. You heard the buzz on April 2nd. Listen, there's the markets are like, there's a trade war coming. And anytime you have a trade war looming, the markets hate it. It's uncertainty because the markets don't like uncertainty. And that's exactly what's happening right now. So we don't know what's going to happen. And we don't know how other nations are responding. We know that people aren't liking it. And we know that Trump's trying to level the playing field. And so we have uncertainty in the markets. And April 2nd, there's been many people that have talked about the fact that after April 2nd, we could be in the smooth sailing lane. But who knows? April 2nd could hit. We could take a whack more than we think. The markets could freak out and the price could go lower. So there's a pullback right now going on from risk assets like crypto, like tech stocks, and the pullback is happening. People are moving into more safe things like bonds and stuff like that. Okay. It's not that Bitcoin suddenly became bad. It's not the strategy all of a sudden became bad. It's just people are playing defense right now. Right. That's exactly what's happening. All right. So we got big spikes going on. You got your airplane going along. We look like we're going to 88K. The options expire. Turbulence in the marketplace. All right. Those are kind of short-term turbulence. You got macro trends like inflation, and you got the trade wars going on. That's more like the lights are flashing. People are worried the plane's going to crash. We know long-term Bitcoin and strategy are the best bet ever, not financial advice, but we know long-term that they are. That's my point of view. But in the short term, this is what causes fear, okay? So if Bitcoin stabilizes and we go and we start going and holding at the $82,000 price level, and we could have some upward momentum coming, and it could be like stability or, okay, strength and confidence in the bull run. We go below 82,000 in the short term, people start freaking out, and there could be a lot of selling pressure, okay? So basically, let's sum it up. Well, I just summed it up. We don't need to do that anymore. I just summed it up, okay? So let's get into the next piece, all right? Technical indicators. Let's take a look at this, all right? So the most important indicator, one of them that we can look at right now, it's called the mean coin age. And basically, it's the average age of all unspent Bitcoin. So basically, it's how long coins have been sitting there without being moved, right? So whales have bought coins. How long is it sitting there without them moving it? So it's called the mean coin age, right? The length of time it's been sitting there, or the average length of time that it's been sitting there for these coins. So, so right now, what I just shared prior, it looks like it's a bullish indicator from a long-term perspective, and it is a bullish indicator because the whales are holding on to their Bitcoin, and more people are actually holding on to their Bitcoin. So it's actually a good long-term sign. All right. The RSI, let's take a look at this. The RSI is the relative strength index, and it basically measures the strength of an asset. And so when the strength of an asset is above 70 on this indicator, it goes from 0 to 100. When it's above 70, it means it's overbought. And when it's below 30, it means it's oversold. And right now we're about at the 40 range right now on Bitcoin. So we are definitely not overbought in the marketplace right now, which is also a good sign for the bull run over the 2025 and 2026. Okay. But it's about the trend of the RSI that we're also most interested in. And so, and this is kind of the one that I'm going to go over right now. It's the same trend that actually triggered us to go through the $100,000 price point that happened during election time. So let's take a look at this picture right now, okay? So the RSI right now, it's retesting the actual trend line. And so it's kind of like before we take the next lap, you know, you're in a race car and you're going, and before we take the next lap, you got to fill up the gas tank so that the car can take off and go into turbo speed. So let's take a look at the RSI and what it means if it actually breaks down. So right now we're hovering around about a 40 RSI zone. Remember, below 30 means it's over sold, and a lot of people are going to be gobbling it up, and above 70 means it's overbought. Okay. So 40 is the key level right now. If it holds, it could spark another leg up in the marketplace. But a drop below that means we could have another correction going on. So this is kind of a decision point right now on the RSI, which is the relative strength index, okay? And we're at a decision point, and so is Bitcoin. So as we look at kind of what's going to happen more in 2025, this is just an indicator. This isn't the end all be all of what's going to happen. It's just another indicator. So we can look at data, we can look at analytics, and look, are we going to hold at the 40 on the RSI? All right. So if it holds above 40, it's another bullish indicator. Right. So we need to look at that as well. So when you break down all these indicators, we're looking on chain, we're looking at the relative strength index of Bitcoin. Is it overbought? Is it oversold? We know it's not overbought. We're looking at inflation. Inflation is obviously high. That's not a good macro trend. We're looking at the tariffs. That's not a great macro trend. But we're peeling back and we're looking at the overall infrastructure of Bitcoin. And the main indicator that I'm looking at is what are the whales doing? And the main indicator of what the whales are doing is they are holding. And that's the key point. And that's the key takeaway for today. And despite the fact that we have bearish indicators on some of the things that I'm sharing, we also have bullish indicators that the miners are, they're in the game. And basically the big supercomputers that they use so that they can mine more Bitcoin, the hash rate of that is up. And so when the hash rate is up, that's a very good sign. And typically what happens is when you have a halving take place, when the supply of Bitcoin cuts in half, like it did in 2024, it makes it tougher for the miners to mine Bitcoin because there's less Bitcoin, right? So it makes it more competitive and makes it tougher. But the hash rate is continuing to go up, and miners are in the game, which means there's lots of miners in the game because they see this as a bullish opportunity to help mine Bitcoin. So that's another good indicator on the chain, and it's bullish. So it's good. So at the end of the day, we got emotional zones that we're in right now. If we're to analyze what the emotional zones are right now, you have the euphoria zone, which we are definitely not in. That means too many in profit. There's a risk, and we're at the top. And in the euphoria zone, it's time to sell. The belief zone is strong confidence, and it's an early bull phase. The optimism zone is we're rising, but we're cautious. And the anxiety zone is the market's in decline, fear is building, and people are jumping out of the airplanes. And capitulation is like major losses. People are giving up. We're not in capitulation. I don't think we're there at all. Right now, I think we've bounced. I think we're kind of in between the anxiety and the belief zone. But I think if you look at the actual long-term indicators of what whales are doing, I think we're more in the belief zone. And that's key. Okay. So that is the game for today. We went over a bunch of stuff together. But to recap what we talked about today, number one, strategy is fully in the game. And they're going long-term in this game, and they're going to get a huge portion of the bond market, and so is Bitcoin. They're going to get a huge portion of the bond market and the fixed income market, and a lot of money over the next several years is going to flow into Bitcoin and strategy, number one. Number two, Bitcoin, we have whales that are holding on to their Bitcoin, which is a very, very bullish indicator from 2022 to 2025. It shows that the trend is that the whales are holding onto their Bitcoin and that the OTC desks are draining Bitcoin, meaning that the whales are going onto the OTC desk, they're buying up the Bitcoin. And when the OTC desk is draining Bitcoin, it is a very good sign because it's draining off the desks and it's going into the whales' treasure chests and they're locking it up and they're holding on to it. And the trend has been consistent from 2022 to 2025. Number three, the institutional structure that is coming in is very bullish. Institutions move slower, they have more bureaucracy, there's more red tape, and for countries and governments to get aboard, there's a longer process that takes place with this. But overall, we are in a whole new world of the Bitcoin era and the strategy era. So that's where we're at. Overall, long term, I maintain my conviction. I do not waver from my point of we are in a place of a whole new world. We're in a new financial era, which is exciting. And what do you think in the comments? Let me know. So we have lots of people saying, we have Allied saying, I agree, total market manipulation. We have TCC saying, I'm holding my MicroStrategy for 4 years. Yeah, I agree with Swords over there in the comment box. Manipulation should be illegal, right? It should be illegal. Happens all the time. And Dark Energy Solution says that Trump is going to make the Fed lower interest rates, and I concur with that point. And we've also got, what else we got? Put in, what are you thinking of what's going on in the chat box over here? What's your thoughts, my friends? We've got William Justice says, I'm bullish and buying whatever I can afford when I can. This is an accumulation phase, so I think that's cool. And so we got some things going on. And at the end of the day, I hope you enjoyed the data. But I thought it was a good time to come and just dump a whole bunch of indicators from what's going on the chain, and also to dump a longer term viewpoint, because that's what's needed right now for us to have stability. So I hope you have an amazing day. If you have anything you want to leave in the comments box, I'll respond to some of the comments. And then I will see you guys on the next video, the next show. Stay well, my friends.